everyone, a very good evening. You're watching The Money Show on ET Now. We are on day 5 of our very special Personal Finance Masterclass, Personal Finance Unlocked, right here on ET Now. I'm Mubina, Kapasi, and it's been quite an interesting and exciting last 4 days. This is, of course, the culmination where we are going to be talking about not investing your money or, how to sort of buy insurance, but how to spend all that hard-earned money, how to use all that money, and, of course, when to know to take a loan, when to avoid taking a loan, and how to get a bank to even approve your loan, including how to ensure that you keep your credit score straight and keep your spending in line. But before I do that, as always, let me give you a recap of episode 4, which we had yesterday with none other than Nilesh Shah of Kotak AMC, where he spoke about the basics of what should be there in an investment portfolio. Take a look.
What we request investor is to follow 3 guru mantras. 1, be a regular investor in the bull market, in the bear market, in the range bound market. 2nd, do asset allocation to achieve your investment objective. Diversify across debt, equity, real estate, commodity, and offshore assets to create a portfolio which will give real return, outperform inflation. And 3rd, most importantly, be a long-term investor. If you're young but you want to invest for your marriage expenses, then there's no point in investing in equity. You better invest in fixed income products because you will need money to spend on your marriage expenses. On the other hand, if you are an old person but you want to bequeath your wealth to next generation, then there's no point in investing only in fixed income because you have a longer term time horizon. So you should invest some part in equity. So don't just look at your age and try to create a standard asset allocation. Look at your risk profile, look at your investment objective, and then create a portfolio with an aim to generate real return. Your portfolio must outperform inflation. That's the only way you can generate real return on your portfolio. My recommendation will be at least 3 times a year, you should value your entire asset allocation. Are you in right asset class? Is there a need to restructure your asset allocation? Are you on your way to achieve your investment objective? Now, if you are invested in an instrument which is not delivering or which has become risky, you must cut your losses. Many a times what happens, people cut their profit and continue with their losses. Never make that mistake. Allow your profits to run and cut your losses.
All right, well, that was, of course, episode 4. And now, finally, as we just wind down our Personal Finance Masterclass, Personal Finance Unlocked, today we are going to be talking about the very basics when it comes to loan management. I'm sure many of you all are in the midst of paying down an EMI, perhaps for your house, perhaps for your car. You may be considering taking a personal finance loan as well, personal loan as well, pardon me. The last couple of weeks have seen quite an uptick in personal loans, perhaps having to do with the fact that many of us are facing a cash crunch due to job losses, due to income cuts, etc. And hence we decided to bring on board a stalwart from the banking space herself to share the insider tips, if you could call it that, on when to take a loan, how to cut down on your EMI bill, and also some tips on how to get your loan approved. I have with me Saloni Narayan, the Deputy MD and COO of State Bank of India. Ma'am, thank you so much for joining us today on The Money Show. It's our pleasure to have you on board with us. To start off with, ma'am, let's start by talking about essentially when an individual has to consider a loan. Many a times their credit score, their credit history may be a bit flawed for whatever reasons. Maybe they were not very regular with their credit card payments, or maybe they don't have a credit history because they may be first-time borrowers. As somebody who represents one of the largest, or rather the largest bank in India, we thought if you could share some insider tips on what are the key criterions that banks look at before they get a customer's loan approved.
So thank you very much for having me on your show. I am Saloni Narayan, and as far as banks are concerned, there are 5 C's of credit that the bank actually looks at for sanctioning a loan. And they are very simple and fundamental. First is the character. That means the applicant should have a good credit history. The second is the capacity, whether the customer is able to repay the loan in time or the EMI in time. Third is the capital. That means the margin that he brings in, whether he has that or not. Fourth is the collateral, the asset required to back the loan that he is taking. And last is the conditions, the purpose of the loan, the rate of interest, the period of the loan, etc. So these are the 5 C's basis which bank approves a loan to a customer. So if a customer wants a loan, the first thing that he needs to do is think of the reason why he wants the loan. So that is the first step. And what is the type of loan that he is looking for? These days, I will say customers are spoiled for choices as far as banking is concerned. So he can go to a bank, he can apply through digital channels. For State Bank, I can speak that we are really reaching out to our customers by way of digital, especially during this pandemic times. We have our YONO app, which you would be knowing. We sanction gold loans on YONO. We sanction express credit on YONO, personal loans on YONO. Then we have the digital channel, other offerings that we have. We have SMS based requests can be made by the customer. Missed call facility is there. Then for MSMEs, we have a contactless lending platform where he can apply and get the approval online, and the sanction has to happen in 7 days time. Then for SME customers, we have eMudra portal where he can apply for the loan and get it without any assistance from anybody. So a lot of initiatives have been taken by the bank as far as digital is concerned. But apart from these, we have our strong network of 24,000 odd branches to facilitate a customer take a loan. Submits the required papers, the loan will be sanctioned.
Lowest home loan rates out there.
Pardon?
Okay. Ma'am, State Bank of India offers one of the lowest home loan rates out there. But there may be many home loan borrowers and customers who may be thinking that, even though the RBI has cut interest rates, why is my EMI bill still so high? Of course, for new home loan borrowers who come over to banks like a State Bank of India, interest rates are very, very attractive now. But what about for old borrowers? What options are available for them so that they can as well bring down their EMI bill, especially those who may be on fixed interest rate basis? And also, when you talk about refinancing, can it be done via the YONO app, or what sort of a facility does the digital platform provide with that?
Digital platform is basically to get a loan sanctioned. It is not for refinancing. Essentially, it is for sanctioning the loan. So if you want a gold loan, you can fill in the particulars there and you get a loan sanctioned. Of course, you have to give the gold to the nearest branch that you choose, or a general express credit loan that you want to take. It's called a pre-approved loan. It is just a 4-step process. We are choosing the customers, of course, who have a good credit history with us and whose customer behavior is good. We are offering personal loans, unsecured personal loans to them, and just 4 clicks and he gets the loan credited into his account. So refinancing is not done through the digital channel. For that, refinancing is basically what? It's just substituting a high cost debt with a low cost debt. So normally it is a switch from one bank to another. It is not from one product to another. So that cost has to be weighed before you actually do get this loan refinanced.
Okay, all right. Now, ma'am, of course, credit score extremely important. In fact, when you spoke about the factors that a bank considers before disbursing a loan, credit score was as well right on top of your list. For our viewers, if you could clarify how can they maintain their credit score, especially those that will be entering the system or will be borrowing for the very first time, since they don't have a credit history. Maybe their credit score as well will be very difficult to determine, and that in turn may cause the bank as well to be skeptical before giving an absolutely new customer a loan. So what are your recommendations over there? What would be the ideal credit score that a bank would like to see, the ideal transactions that a bank would like to see?
Credit score is perhaps the most significant important factor in determining the loan eligibility of an applicant. And rather, some banks are also giving better prices if the credit score is good, better. So, and there are many credit companies which are doing this credit check for you, like CIBIL, then you have CRIF Highmark, then you have Experian, and the score ranges from 300 to 900. So a score as high as 750 is considered to be very good. So I will just tell you simple steps how to maintain a good credit score. One, of course, first is know where you stand. So if you want to take a loan, you can first start by getting your credit score extracted by the credit rating agency. You get the score. Then the next is the hygiene factor. So you look at the data, whether there is any bill that you have paid, but actually that has not been accounted for in the CIBIL. Third is the financial discipline. You need to be very disciplined. I think that is the most important thing. And in this, I will suggest very simple steps. First is pay on time and every time. So don't make a default. If the due date is 28th of the month, then it should be paid well in time. It should be paid. Even 1 day's default is not acceptable. That spoils your CIBIL score. Second is don't be greedy. Don't take loan more than you require. Don't be over leveraged, and don't take too many loans at a time. You take only what you require. Third is keep your friends close. That means if you have guaranteed somebody's loan, you also need to keep an eye on whether that person is paying the loan, because otherwise your credit score will go down if it is not paid properly. Then you have to also have a good balanced credit mix, a mix of secured and unsecured loan, short-term, long-term loan. So if you have more of secured loan in your portfolio, then your credit score will naturally be good. And last, of course, is keep doing the reality check once in a while. That is how you can maintain your credit score.
Okay, all right. Very simple and actionable tips. But I think also, one of the most important tips that you mentioned is also don't take too many loans at a time. And yeah, sometimes if you're guaranteeing loans for other people, you will need to keep track of their transactions as well, if they are properly servicing their loans. If they are not, then your credit score as well will be hampered. So I think it also serves as a cautionary tale, to be on the safe side. Preferably don't guarantee other people's loans. You've got enough of your own finances to take care of. Okay, Ms. Narayan, thank you so much for joining us today and helping our viewers with some of these very, very valuable, should I call it insider tips, from State Bank of India and from you on how to manage your loans, how to manage your credit score, which is an extremely vital feature to ensure that your bank disburses you a loan. And now, of course, loan disbursals can be done via apps. The YONO app, for one, can disburse you a loan in just a couple of clicks. So disbursing of a loan has become very simple, but that does not mean you get yourself into a debt trap.